Hi, and welcome back to the Food Fund, where we analyze investing in food stocks. If you love food and love buying food stocks, beverage stocks, and restaurant stocks, you will love this channel. In this video we will be analyzing if Cracker Barrel stock is a buy. Cracker Barrel, stock ticker symbol CBRL, is just one of many companies we explore on this channel. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Cracker Barrel Old Country Store. Cracker Barrel was founded in 1969 and has its headquarters located in Tennessee. The restaurant chain is known for its southern cuisine, including country fried chicken and steak, chicken pot pie, greens, macaroni and cheese, fried apples, sweet tea, and grandma's sampler. The restaurants feature a country atmosphere and are frequently located near interstate highway exits in the southeastern and midwestern United States. Now let's look at the price action. Starting with the 1-year chart, we see that Cracker Barrel had a CAGR of about -35%. Zooming out to the 5-year chart, we see that Cracker Barrel had a CAGR of -15%. Cracker Barrel share price has been falling over a long period of time. Whatever their problems are, they have been present for a while. If we perform a backtest comparison of investing $10,000 in Cracker Barrel versus the S&P 500, we find some unsurprising results. In that comparison with the S&P 500, $10,000 invested in Cracker Barrel would have shrunk to just $5,406 or a -10% CAGR versus $17,271 or a 9.8% CAGR if invested in the S&P 500. This demonstrates tremendous underperformance for Cracker Barrel. A Cracker Barrel investment would have been much more volatile with a 38% standard deviation versus 18% for the S&P 500. Cracker Barrel also underperformed the S&P 500 in terms of the best year performance, for which Cracker Barrel grew 6.3% versus S&P 500 31%, and worst year performance where Cracker Barrel fell 26% versus S&P 500 18% fall. In terms of max drawdown, Cracker Barrel fell 57%, more than 2 times worse than that of the S&P 500. And surprisingly, Cracker Barrel also underperforms the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio. Now let's hop over to market share and take a look at, you guessed it, Cracker Barrel's market share. So we come over here and type in the ticker symbol for Cracker Barrel and see that the market share is tiny, just 0.38% out of the publicly traded food, beverage, and restaurant stocks currently in the market. This means that just 0.38% of all eating spend goes to Cracker Barrel. Small market share would not really be an issue if the company was growing market share. But Cracker Barrel is clearly not. The 5-year market share CAGR for Cracker Barrel is 0%. This means that Cracker Barrel's market share has not grown in half a decade. If we start in 2019, we see that the market share was 0.37%, 0.41% in 2020, and reached its peak in 2021 at 0.42%. Since then, Cracker Barrel's market share has fallen to 0.4% in 2022, returned back to 0.38%, just slightly higher than the 2019 value. Growing market share is a key component of any successful business. Unfortunately, this may not be the only area in which Cracker Barrel is lacking. Let's take a look at the fundamentals. Gross margin is 32%. This is on par with many casual restaurant chains. Revenue has compounded at around 3% over the past 5 years and has reached over $3.4 billion most recently. This is decent revenue growth, but, as we will discuss later, it may not be enough. Looking at cash flow, we see a -9% CAGR over the last 5 years for operating cash flow, while capex has improved at a 2% CAGR. As a result, free cash flow has fallen at a -14% CAGR. Despite capex reduction over the years, free cash flow is pushed down by falling operating cash flow. Some factors such as falling operating cash flow are really challenging for management to overcome. Weighted average shares outstanding have fallen dramatically over the last 5 years. going from 24.1 million shares in 2019 to 22.3 million shares most recently. Cracker Barrel has been buying back shares. In fact, share buybacks have accelerated in recent years, which is a strong positive for shareholders. However, given the falling free cash flow, it is uncertain how long these aggressive share buybacks can continue. Now let's view return on invested capital. Return on invested capital has fallen from 16.5% in 2019 to 5.8% in 2023. This is bad. Cracker Barrel has become significantly less efficient in driving profits from its investments. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 7 days in 2019 to 8 days most recently, Cracker Barrel has gotten a little less efficient over time. However, 8 days is not a high value. Ideally, we would like to see a value under 0, which would mean that the company is actually generating cash flow by getting paid earlier than they have to pay their suppliers, allowing the company to invest those funds before they pay their suppliers. Now, let's look at Cracker Barrel's debt. The net debt to EBITDA has increased over the past 5 years, going from 1 in 2019 to 3.2 most recently. No debt is better than some debt. However, Cracker Barrel's debt level is not prohibitive in my opinion. Last, let's explore dividends. Current dividend yield is a robust 5.5%, but with a dividend payout percentage of 116%. That is a very high payout ratio. Cracker Barrel is paying out more in dividends than its earnings can support. This indicates that the company's dividend practice may not be sustainable. Dividends per share for this company have grown at a 10% dividend per share CAGR over the past 3 years and a 1% dividend per share CAGR over the past 5 years. Cracker Barrel's dividend payments have clearly been less consistent than ideal and is a red flag for dividend investors. The fundamentals of Cracker Barrel are interesting with some good factors and some bad factors. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Cracker Barrel. It is a restaurant company with a gross margin of 32%. The 5-year revenue per share CAGR is 5% and the 5-year free cash flow per share CAGR is -12%. Keep in mind that these values are somewhat inflated from the aggressive share buybacks. A return on invested capital of 6% is not great and I think it might get worse. Next, the cash conversion cycle of 8 days is not bad. Concerning debt, a net debt to EBITDA of 3.2 means that it would take Cracker Barrel a little over 3 years to pay back their debt. So from a fundamental standpoint, Cracker Barrel leaves a lot to be desired. Now let's switch our attention over to valuation. Cracker Barrel is undervalued relative to the S&P 500 with a ratio of 0.7. The price to earnings growth, or PEG ratio, is 1.7, indicating that Cracker Barrel is overvalued relative to their projected earnings growth. Even though Cracker Barrel has grown revenue over the past 5 years, their market share has not changed. This indicates to me that their revenue growth is not enough. The valuation is also very interesting. The market is discounting Cracker Barrel, presumably for the subpar revenue growth and falling free cash flow. However, the company is still overvalued relative to future growth. Future earnings growth will be an issue as the company has spent $116 million on dividends, $20 million on share buybacks, and $17 million for debt interest payments in the last 12 months. This sums to $152 million when the net income for that period is only $99 million. Something will have to change in the near future. To me, this implies that there is risk of the share price falling further. The good news is that Cracker Barrel has a loyal customer base that continues to drive its revenue upwards, though that growth is decelerating. If management can figure out a way to acquire new customers and drastically cut costs at the company, Cracker Barrel could reverse its share price decline. Cracker Barrel is an interesting company but currently has too many red flags for me. For these reasons I will pass on adding it to the watch list. Many thanks for watching. What do you think about Cracker Barrel and its falling free cash flow? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.